All right, let's dive right in. We're breaking down the third quarter 2025 earnings for National Bank Holdings. That's ticker NBHC.
And right off the bat, you can see the market really liked what it heard. The stock popped a solid 2.3% on the day of the earnings call. So what was all the excitement about? Let's get into it.
So here's how we're going to break this down. We'll look at the Q3 beat, see what's driving the quarter, check out their big Texas growth play, and then an interesting investment in their future. And of course, we'll wrap up with our take on the next call.
Okay, Section 1, the Q3 beat. And really, the headline here is that they delivered a clear beat on both the top and bottom lines.
And when you look at the numbers, this was a really clean beat. We're talking adjusted earnings per share of 96 cents. That's a whole 11 cents better than what Wall Street was expecting. GAAP EPS, revenue, they sailed right past expectations on both. There's just no other way to put it. This was simply solid execution.
All right, so a beat is great, but the real question is, why? How did they do it? Well, it all comes down to discipline. Let's unpack the core operational strength that made this quarter so good.
You know, what really stands out to me is their net interest margin, or NIM. Basically, that's the profit a bank makes on its loans. It came in at a really healthy 3.98%, and it actually expanded a bit. Now, in this environment where funding costs are squeezing pretty much every bank out there, expanding your margin, that shows some seriously disciplined pricing on both loans and deposits. It's impressive stuff.
And check this out. They're not taking big risks to get those returns. Their CET1 capital ratio is a rock-solid 14.7%. You know, this isn't just a strong balance sheet, it's a fortress. It gives them this huge war chest for growth, maybe some stock buybacks, or really just to handle whatever the economy decides to throw at them.
And this number? Wow, it really highlights their credit discipline. We're looking at 5 basis points of annualized net recoveries. Yeah, you heard that right, recoveries. That means they actually collected more money from old bad loans than they had to write off for new ones. That just screams excellent underwriting and really proactive management of any problem loans.
So, looking forward, management is basically telling us they're feeling pretty confident. They're guiding for that net interest margin to stay stable, right in the mid 3.9% range. What does that actually mean for you? It means they think they can keep their profit machine humming along nicely, even if the Fed decides to start cutting rates. That's a strong signal. Okay, so that strong core operation, that's the foundation. Now, let's talk about the rocket fuel, their massive growth play in Texas, which is all about the strategic acquisition of Vista Bank shares. And make no mistake, this deal is a real game changer. It's an all-stock deal, it's going to close in early 2026, and it's going to create a bank with about $12.4 billion in assets. But honestly, the size isn't even the most important part. What's huge is that it gives them a massive foothold in the booming Dallas-Fort Worth and Austin markets. We're talking about two of the hottest economic zones in the entire country.
And you can just tell management is thrilled about this. The CEO, Tim Laney, said this on the call, and I'm quoting here, "The more we learn about the quality of our new teammates, the more excited we become about future possibilities." You know, that tells you this isn't just a deal about numbers on a spreadsheet. They genuinely see a strong cultural and strategic fit here.
All right, now for what I think is the most interesting part of the story. Let's call it the mystery box. We're moving beyond traditional banking to look at a tech wildcard called Tunify that could be a massive part of their future. So, what exactly is this 2UniFi platform? Honestly, that's the big question on everyone's mind. Management is being super tight-lipped about it, playing this one very close to the vest, and you can feel the suspense building around it. And listen to this. When an analyst tried to press him for details on the call, the CEO gave a very telling response. He said, "We're in the middle of some pretty interesting partnership discussions, and we're really not in a position to speak in more detail." Come on. That's corporate speak for "we've got something big cooking, but we can't tell you yet." It's a huge signal.
So, okay, let's piece together what we actually know. We know it's a new tech platform aimed at small business banking. We know it's why non-interest expense jumped up to $6.2 million this quarter, and we know they're going to spend even more, about $7 to $9 million next quarter on marketing and getting folks signed up. But here's the absolute key. Management has committed, they've promised, to give us actual revenue guidance on the very next call. So yeah, right now it's an expense headwind, but in just a few months, it could turn into a massive catalyst.
Okay, so let's put it all together. This brings us to our final section, the next call. This is our take on what this all means for the stock, and we'll even give you our rating and a forward-looking trade idea.
So, where do we land? We're giving this an outperform rating.
When you combine the strong execution, that really smart Texas acquisition, and the potential huge upside from their tech platform, yeah, outperform feels right.
So, how might an investor think about playing this? Well, here's our three-step thesis. Step 1, you've got the core banking stability plus the boost from the M&A deal. Together, that provides a really solid valuation floor for the stock. Step 2, you've got the catalyst. That two-unified platform, it's basically a low-risk, high-reward call option on the company's future, with big news expected next quarter. So, what's the trade idea? Step 3, initiating a long position in the stock seems pretty logical. And if you've got the appetite for it, maybe pairing that with some short-dated call options could be a way to speculate on a really positive revenue announcement when they report Q4 earnings.
And as always, a quick reminder, this is not financial advice.